Good morning. Welcome to VIRŠI Investor Webinar. As always, we will start with company's presentation, followed by a live Q&A session. We're looking forward to receiving your questions. Please submit them through the Q&A box that you see beneath the presentation. This session is being recorded and will be available for rewatch shortly after the call. Let me now introduce you to our hosts. The VIRŠI Chairman of the Management Board and the CEO, Jānis Vība, and Management Board Member and CFO, Vita Čirjevska. Jāni, Vita, please continue.
Thank you, Ieva, and hello to all investors and everybody who is interested in our company's development. So we had quite a, let's say, interesting and full of events year 2024. It was also the year of record high investment amount where we invested around 23 million euros. So a lot of things to talk about today, so we will kick off right away together with Vita. So I guess we will start with usual, let's say, macro slide. Since we are operating in fuel, natural gas and electricity markets, so these are the areas where we are also looking what is happening. So on fuel side, in terms of macro level, we saw that in year 2024, oil prices were around $70 to $90 per barrel, which is actually not super significant fluctuations if you compare it with previous months. And the trend was that this, let's say, peak in oil prices was usually at the point when there were some tensions in Middle East, because Middle East is obviously a very important area in terms of producing oil and also in terms of transporting oil. And when these tensions were, let's say, not so big, then obviously the oil price was going down. Also important to remind that OPEC plus countries are still expanding those oil production cuts, at least until end of 2024. We will see how it goes in 25. And of course, the biggest event in world politics was Donald Trump's election in the USA, which obviously is very interesting what will happen next, because nobody knows. The policy is very unpredictable, but what we might guess is that if these tariffs and, let's say, war on trade continues to escalate, then obviously it will lead to higher inflation rate in countries affected, and also very likely that this economic development will be slower than it would be without tariffs. So from that perspective, oil prices might actually continue to be low or maybe even lower. But on the other hand, we of course have to remember about sanction policy. There are some, let's say, discussions about putting additional sanctions on Venezuela and Iran, which are both quite big oil producers. So depending on where we go with sanctions, of course, the Russian sanctions also is open, let's say, question what will happen next. But if the sanctions are, let's say, bigger than currently, then this will again give a higher impact on oil price. So we'll see which of those effects will take over. On natural gas, relatively, I would say, calm year, at least in first half of 24. The prices of natural gas was actually already in first half of the year lower than previous years, and it was around the same level as in 21. And this was primarily driven, of course, because Europe had stocked up storage levels, and also the demand for natural gas was not very strong. But actually something changed towards the end of the year. So of course, I guess we remember that there was a suspension of natural gas transit through Ukraine, which of course limited this supply of natural gas in the market, and also together with the relatively cold winter in Europe, also had some push towards higher prices for natural gas. So we saw that actually towards end of the year, the prices were reached almost already 50 euros per megawatt, which was actually quite a big jump versus maybe previous months. And on electricity, of course, I guess we remember as well, but just to remind that in September, S-Link 2 cable resumed operations. The cable, of course, connecting Finland and Estonia, and which had a good and, let's say, stabilizing effect on electricity prices in our region. With regards to Latvia, and maybe more specific, is that our solar park capacity is now doubled in 24 versus 23, but still this solar panel capacity level is still quite far away from Lithuanian and Estonian markets. So still we need some catch up to do. So that's a very quick run through macro level picture. And now I guess just a couple of words also on our strategic goals. So previously we had communicated strategic goals up until 26. But this year we have actually late last year we have revised our strategic plan and also put some numbers how we see the company developing until 27. And there are two, I guess, items which I would like to stress. So one is that we are putting our target of 90 stations, which we previously expected to launch in 26. Now this target is put on 27. I will explain the reasons why. And also in terms of financials, which is EBITDA and net profit numbers, we are basically still reaching the targets which we communicated before, but the thing is that we are putting them also in 27 rather than 26. And this one year delay is mostly because we see that this picture in economy and geopolicy around the globe has changed quite drastically versus maybe a couple of years ago when we created the initial long-term plan. And we see that, of course, this economic development is being much lower than we hoped it will be. Just to remind, in Latvia, we had negative GDP growth in 24, which obviously is making us a bit more careful about making huge investments. So we are still doing investments, but maybe at a bit lower pace and at a bit longer period. But all in all, still we are holding that our assumptions at 27 will be very strong. We see that these financials should be increased quite significantly, mostly because we believe that those investments which we have done in 24 and also some years before, those will generate return in the coming years, because all those investments, usually, at least in our business, they need to have some time to start generating investments at, let's say, good return levels. So this is on strategic goals, but we are also having goals on ESG, and that is where Vita will jump in.
Mm-hmm. So about the sustainability and ESG for in year 2024, we actually had a major shift in our general understanding and general target setting through all the organization. We see that this has been like explanatory task to go through all the areas and understand what can we do better and how can we do better and how to align these targets all along the organization. We have been setting our 15 key performance indicators for 2025.
We have assessed the impact also in the longer term until 2030, but currently, due to the legislation, we go step by step, and the first year for 2025 is set internally. We have set these goals in three areas in E, S, and G: environment, or our own value, creating the future today. Is about the emissions generated in our own operations and also all through our trade activity, and also the waste management. In the social perspective, where we see three directions: employees, clients, and suppliers, and also in governance, where we see our business relationship, governance internally, and also creating this awareness and training of our employees to, let's say, shift the understanding of sustainable business internally. So this has been a big road to these targets, because initially we were setting our targets on efficiency, but more like just increasing efficiency in all areas as much as you can in a way you can. Then we had a period of 2 to 3 years where we had this sustainability as a goal, but also increasing sustainability. And actually, all the things done under these activities were good in a sense, and were also towards the improvement. But this has been aligning our goals through the organization and having uh, one understanding on what we can do and what we need to do to make VIRŠI more sustainable.
Okay, so let's move then each goal step by step. So let's start with station network. So we are actually very happy and proud about 24, because it was really a powerful year as we launched 10 trading sites. And in our business, 10 trading sites is actually a very big number. Very rarely somebody can do like that, something in 1 year. But we have done it, and we did it basically. We are actually happy about that work, which was devoted to, let's say, launching these projects and took several years before in terms of documentation and everything. This is finally kind of resulted in real, let's say, real stations which we can see in the roads. And in terms of locations, so we have launched 8 fuel stations in Latvia. 1 is shop only trading place in Latvia, and 1 is also a fuel station outside Latvia, which is located in Lithuania. So quite, let's say, across geography, quite dispersed, and also in terms of business, you have shop and also shops with fuel, so quite different options. But yeah, so we are very happy about this because obviously this required quite a big effort and quite a big investment amount, and we are confident that this will bring those returns in coming years.
But to extend the shop network and also the fuel stations, we need the employees, and this has been quite challenging year also in towards building up our value as an employer. This has been challenging in the past years due to macro situation and the payroll models and challenges in the market. But this year we made our own challenge. We made the challenge of new teams. New cities to open up in Latvia, also a new country, Lithuania, and we have increased the average count of employees by 15%. This has been also challenging to apply all the processes, values, and align everybody in the same level as we have it over through our stations. But we see that we have found the right people in the right places, and we are happy about them. And in the last year, we also received CV Online Top Employer Awards in in a level that we did not expect it so fast to reach, as our top target was set to top 10 in 2026 and now in 2027, but actually we reached it already in the top for the year 2023, and we reached place 4 in the main category, and we are top selection as a first thing to come in mind as an employer in Latvia, and also very high level in the trading sector, the second place and first place in Zemgale region. As we are mainly represented in Latvia, so this Latvian top is our main benchmark in our values as an employer. And I think it has been a great year for our HR and everybody involved, and also thanks to our employees who have sustained our fast growth in a past year.
Okay. So the next strategic goal is to be leading player on alternative fuels. So here again, I will just remind that we are having two, let's say, main alternative fuel products. So the first one is CNG, which is compressed natural gas, which is mostly devoted to heavy trucks. And on the other hand, we have electrical points, charging points, which is obviously mostly devoted to light transport segment. And in both of these segments, we are happy that we are seeing quite significant growth. We are seeing that both of these segments are growing quite good, and also the margins are quite okay. And that's why we obviously will continue to develop both of these fields and to continue to keep our number one position in those fields in Latvian market. But one thing I wanted to maybe talk a bit more today is this biomethane plant, which we have talked about in some of the media in Latvia. But just to be on the same page, so currently we are already completing the field work, and the biomethane plant is started to being kind of developed. And we are, as you can see in those pictures, that's a step 1. Next steps will be to install the equipment and everything. And we are expecting that by Q1 26 we should be able to finalize this project and start already producing biomethane. But again, just to remind you, biomethane is in a way like a green or friendly for nature natural gas, which is being produced from different kind of waste. And in Latvia, there is a small, let's say, town located in northern part of Latvia, where we are building this plant. There are quite a big amount of agricultural raw materials which we can use for this plant. So then you have to transport these materials to biogas station. Then you are basically making this biogas cleaner up until biomethane level. And once you have biomethane, you are putting into the grid. And then throughout this grid, you can sell this biomethane to your buyers. And we already have concluded agreements with our buyers for this product. So we now have to move on and basically launch this plant by Q1 26. So that's on biomethane. And just to remind that another goal which we have is business diversification. So how do we measure business diversification is that we are measuring what percentage of our gross profit is coming from non-fuel segments. And we see that we have made some good progress over the past years in this field. So if, for example, we see that our shop or convenience store segment was making around 39% of gross profit back in 22. Then in 24, this is already close to 50%, which is quite a material increase, and we are happy about that because convenience stores are obviously having higher margins. You also don't have credit risk. And especially we are happy about this because it's not so that fuel is not growing. Fuel is also growing, but simply convenience stores are growing much faster. So currently it seems that we are in line with fulfilling this goal in coming years.
So the next goal, EBITDA, as Jānis already presented, we have experienced growth in gross profits area, and we will also touch upon each big segment of our gross profits in later slides of this presentation. But the gross profits have gone up by 9.3% or 3.5 million, and have generated a big value for VIRŠI. At the same time, as we have discussed already in the previous slides, this has been a period of big investments. And in respect to EBITDA, the main effect from these investments or opening up new markets comes from the payroll expenses, where our cost of sales has gone up and administration has gone up. And in cost of sales, where the effect is the main, around 85% of the costs in growth in this area comes from payroll. We have attracted 160 new employees for VIRŠI over this year, and also as the fuel station network opening works, we firstly onboard the people in our existing teams. We train them for several months, and when the station is ready, we build these teams in the new stations. But that means costs before actual profits. And this has been the year of investments and expansions and new projects as well. So there has been effects from the costs. And year 2024 in respect to 2023 in EBITDA respect has been like steadily, and there has been no big growth, but we have sustained the same level over this year, and we are happy about the result. And we see that this base or this year has been a base for future developments. And to the net profits. And in respect to the net profits, we see that almost zero effect from the EBITDA, but also the other effects for the net profits are related to this expansion. In this past year, we have built up the new stations and invested in new projects in total of around 23.3 million in investment cash flow. And part of that comes from the lending from the banks, where lending from banks have increased by 30%. That means this lending base has increased. Also, we experienced Euribor effects, where in the end of 2023, Euribor actually reached its peak over the past years. And this effect from the Euribor, when you adjust the agreement rates, has been, let's say, the highest over 2024. Each and every year, we still manage to get the better rates on the fixed rates on our loans. And we see that in next coming years, according to the forecasts, these expenses in the rate level should become less. We also see that the lending will be less over the next years, as the big investment year has been over 2024. So we see that this cost has been there, but we see that it's such big shifts over the next year should not be there. Also, the depreciation amortization, there has been a shift up because the fixed asset base has also gone up significantly due to the new stations, new locations, and new investment projects. And this drives us to the net profits, where they're shifting down from the past year. Also, over the past years, we saw the effect from the financial instruments valuation due to the electricity price turbulences, where it went up in 2022 and then shifted down in 2023. In this year, we see that this electricity price has been normalized, and we see that right now the value of the financial instruments has reached its stable level, and here in respect to 2023 the cost has decreased. So in total our net profits have decreased by 270,000 euros, but in percentage terms and in the perspective terms, we still see that the result is good, and result is a good base for the future net profits growth.
Yep. I guess now we will quickly go through each of those biggest business segments. Let's start with fuel. So what has happened in fuel is that, as you can see in right-hand side, so the market in Latvia in terms of liters sold in retail in 24 has been growing by 1.2%. We have managed to grow by 8.8. So it obviously indicates that we have quite a strong growth, despite the fact that market is quite stagnant, which also means that we are increasing our market share, and obviously we are happy about that because of new customers coming and also staying with us. In terms of other things which we are, let's say, happy about is our mobile application, because when we launched it a year and a half ago, we saw that there is maybe quite a small percentage of customers using it initially, but now this percentage is already much bigger, and we are happy because obviously customers can pay by this app. If they are in hurry, they are not going into the store, and also our employees are, let's say, less overloaded. And two things about Latvia in general. So we see that 25 is currently the first year since a very long period of time when Latvia is more competitive on excise tax for diesel compared to Lithuania. So we see that Lithuanian, let's say, business customers are fueling in Latvia, and also our Latvian transit customers, which previously fueled in Lithuania, are coming to Latvia and doing it in Latvia. And second thing is just reminds that we are approaching this emission trading system in year 2027. Which will basically defines that all fuel traders will have to buy quotas for each of the CO2 put into the market. And current estimate is that based on current prices, the increase in liters sold could reach at least 15 cents per liter when we are into this system. So basically it means that fossil fuel products will most likely become not cheaper, but more expensive in future, while renewable or alternative fuel types could actually become more competitive versus fossil fuels.
So. Yeah. So in respect to convenience stores, which has now been our biggest business in a gross profit perspective and also employee perspective, this has been quite challenging year. As I also mentioned in the HR block, this has been opening up the new markets. That means challenges in choosing the products and services we offer. This means challenges in the supplier selection and the logistics chains. But we had done a major work and also set up everything to be up and running. For the shop, this has been also a turning point in this year, opening up new shop in Latvia, and also watching at our customers, what are they interested in or not, if there is no fuel station around. So this has been a big year for also for the shops. But in the end, we have still managed to grow our results, and we are growing much faster than the market, as you see on our also Nielsen data for the fuel stations in Latvia. With the shops, the tendency is that we still keep up on and a bigger increase over the past year. We have gone up by 18.6%, while the shop together with us only by 8.8%. In respect of the shop, we have also been able to put more interest on the loyalty system, where we have reworked that or shaped up it at the end of the past year. We have created new offerings, and we have understood which are the main product of interest, and how to attract the customers more to get this better break even on the supply demand side for the shops, and we believe to have the effect in already in the 2025. So.
Mm-hmm. And the last of the segments which we wanted to touch on is energy, or in other words, electricity sale. And in this segment, I guess a key point to understand is that we are still a relatively new player in the market. Since we started this segment was, I guess, a couple of years ago. But we see a very positive and strong dynamics in terms of the electricity volume which we are buying from producers and also selling to our customers, as you can see in the graph. And we are also happy that in 24 alone, we have managed to double our number of business customers. And also in only slightly more than 1 year's time, we have managed to become fourth largest electricity supplier for households, which in our mind is very good, and we will obviously continue to expand this segment, because it's very, let's say, naturally it goes together with our other products which we are offering to our customers.
So we arrived to our key financial indicators, or the last section of our presentation. As we went through the presentation, so this has arrived to the general understanding that this year has been a year of investments, a year of developments, and a year of opening up new directions in our portfolio. And we see that the main business is still growing at a good pace, and but we need to have these expenses to shift our operations at a new level. In this year, return on equity is 6.7%, which comes from the equity side, from the net profit side effects. As we discussed before, if we see the equity assets proportions to 48.9, and our net debt EBITDA ratio is 2.3. This year it has been shifting up because we had the lending year, the investments year, and we saw that EBITDA was sustained at the same level as in 2023. We believe that our financial situation and financial results at this stage is in a good shape. We have done a lot of homework this year, and we are waiting for the results on the next years to come.
Exactly. So I guess that's pretty much from us on the formal side about presentation. So thank you for your attention. But let's go to the questions, if there are any.
There indeed are some questions received. Participants, if you'd like to add yours, please use the Q&A box. We'll start with the first one. What is the plant capacity for biogas plant?
Yeah, thank you for the question. So the answer is that capacity is 5.5 megawatts, and we expect that we will be able to produce up to 60,000 megawatt hours per year.
Thank you. Coming back to the slide that you showed in regards to EBITDA, in your EBITDA bridge from 2023 to 2024, you showed increased gross profit, but then separately showed a negative impact of increase in cost of sales. But surely gross profit is after cost of sales. So what was the separate item of cost of sales?
Yeah, this separate item in the better wording in English would be selling costs. So these are sales costs or sales team. And the gross profit is obviously sales deducting cost of goods sold. So this is purely selling costs.
Which includes salaries
Yeah,
for
of
our
the sales
stations.
employees, yeah.
Thank you. Our next question, what financial instruments do you still have on the balance sheet? What is the current policy regarding the use of financial instruments?
Okay, we as we mentioned over the past years, the financial instruments in our balance sheet are mainly pairs of the major effect is from the contracts in a period of the instruments contracted in 2021, but the use of these financial instruments is planned in 2023 to 2027. So the top value or the main amount of the instruments units behind that was in 2023, and right now we are sort of spending them over the next years. We see that our policy will be to get the most from the situation or the offer we can have. There are no strict policies in respect to that, and if we see the past year's effects, there have been ups and downs in the financial instruments, but they are mainly related to electricity price dynamics that we could not affect on global basis.
Thank you. Continuing on the financials, adjusted ROE, return on equity, has been declining. What are your expectations and targets for coming years?
Yeah, it's true that its ROE has been declining slightly. I guess the main message here is that we are currently undergoing a very heavy investment phase. And obviously, when your investment is so, let's say, large, at least to our balance sheet, then of course you're putting more equity in the company, but not yet receiving those, let's say, returns immediately, because you have to have some time when stations are picking up the speed and start generating those returns. And as indicated also in those strategic goals, so we expect that this heavy investment will pick up the returns in this and next years. And in order to obviously reach our financial targets for 27, just to remind, we had more than 20 million EBITDA planned for 27. This will obviously also increase our ROE in coming years. So we are in a way like currently at the bottom in terms of ROE. We are scaling up the business. Once they are kind of going and giving us return, those new stations, then definitely there should be ROE development to positive sign.
Thank you. What is the plan for natural gas trading?
Yeah, also a good question. So we have started selling natural gas to our B2B customers since early 25. So that's the first step. We actually did the same also in our electricity. First was B2B, then B2C followed. So we are now looking how the B2B portfolio will develop. And of course, it's possible. I am not able to say when and whether it will be 100% true, but it is possible that the next step will be also natural gas selling to households in future.
According to financial report data, energy gross margin has decreased by 85% to 1.3 euros per megawatt hour. Do you see this margin remaining stable going forward? Ignitis data shows energy sales average gross margin being around 3 to 4 euros per megawatt hour.
I guess very complex to answer this question in short, but I guess a lot of factors. So you have B2C segment, you have B2B, you have energy which are buying from households and selling into the market. So it's very, I would say, complex to compare this 1.3 versus 3 to 4 versus Ignitis. And I guess the honest answer would be that in case we are managing to increase our household portfolio as we plan to do, the margin is relatively bigger in this area. So the weighted average margin hopefully should also increase in future if we manage to execute our strategic plan for this segment as we have expected. So that's, I guess, the answer, which is not very concrete, but also best which we can provide.
Thank you. Are you able to provide additional information about the network expansion outside Latvia? How many stations are you planning to open? And would all of these be in Lithuania, or would you also consider further expansion to Estonia, for example?
I can take it. So basically, Estonia is currently not, I can honestly say, not in our list, simply because we have quite big other projects which are demanding quite a big amount of capital, and we see that this return in other projects is quite okay. So Estonia is not in this area of next projects. With regards to Lithuania, that's a bit more complex question, because when we launched Lithuania operations, the assumption was that our B2B customers will continue to fill in Lithuania, because always the excise tax was lower in Lithuania than in Latvia. Now, actually, the situation has changed. In Latvia, excise tax is now, for the first time in many years, cheaper than in Lithuania. So a lot of B2B customers are going to Latvia to fill, which of course makes us, let's say, our ambitions to invest significant amounts of capital in Lithuania expansion, let's say, less ambitious currently. So we are not, let's say, so currently focusing in aggressively growing Lithuania, simply because of those tax policy items. We are better now launching maybe capital and other projects where we see higher return.
Thank you. One more question coming in. Could you elaborate on factors that will contribute to the net profit increase by 2.6 times in 2027, given that the filling station network is going to be expanded by 10%?
Again, we try to kind of explain it that when you launch new stations, it's very often that you need some time when those stations are fully, let's say, operational and fully able to provide returns. It's very often that we see that in the first, maybe even second year, the station is still kind of picking up the speed, and the real result is coming in third, maybe fourth year. Of course, there are some exceptions, so that also in the first year is already super good. But basically, because we have launched quite many stations in 23, 24, which are still kind of picking up the space, we see that this will generate us returns. And you are basically having this scale effect, because we don't see that we will need to grow in OPEX so much in future, because every infrastructure, everything is in place. We just need to scale up our sales volumes in our network. And not only in new stations, we are also seeing that we still can get more results also from existing stations.
Thank you. Seems we have answered all the questions, so we will be closing the call shortly. Jan, Vita, over to you for the final remarks.
Final remark from my side is simply one. Thank you for 24 for being with us, and we are really excited to look for next year, because I guess the growth will be quite strong in next year.
Yeah, thanks also to our team for sustaining our dynamics.
Yes.